Good evening. Days of invasion. Yesterday, today, we're talking about a crazy market, and this is your market wrap-up. And this is Tuesday, and we are now on February 22nd, 2022, 6:15 p.m. for your financial market wrap-up. Okay. So this was the weekend where we thought things could happen, where we were going to see at the end. By the way, I feel very good. I made a call in my newsletter originally. I said, will Putin dare invade before the Olympics are over? He has one friend in the world of power, China. And guess what? You might think it's just accidental. I don't. I think he waited so he didn't interfere with the Olympics, didn't take the glory of China away, and that's when he made his move. Now, I didn't realize the power of Putin, and you should. He has created two new countries in the Ukraine. I've never seen this happen, but he's done a heck of a thing. This is the most powerful man in Europe. I mean, he can go out and take your country and create a new one out of it, and everybody, they go, that's fine. Well, the marketplace doesn't like it, and there's pressures on the market because, number one, I watched what Germany did, and I applaud them. That was a very difficult task for them when they said that pipeline, the Nord Stream 2, forget it. Nothing's going to happen, period. It could be a decade. You don't know. Depends how far this situation goes and how desperate Germany gets for energy down the road. The UK did exactly what you thought. They threw their guns at everything they could. They're telling the oligarchs that live inside of London, and there's plenty of them, we're taking everything. We're sanctioning, and we're going to freeze things. Applaud them. We are weak. I don't know what else to say. We come out with sanctions on 2 banks. The UK did 5, the big ones. We avoided the big ones. We are going to move troops and make them dance from Latvia and other countries, Estonia, and okay, we're moving our troops there. We're not deploying 10,000, 20,000 more troops. We're going to have them dance in different areas. And that's supposed to deter President Putin. I don't think so. I think that he's got his game plan, and I just want to get this off my chest. He's got the Korean book. Anybody, and I had people writing me, giving me an education on the Minsk Treaty, and I'm going, there is no treaty. They've broken it. And guess what? My biggest defender that I was right is President Putin. Did you hear what he said yesterday and what he said today? That treaty's out the door. It was never valid. It was forced on him. It was bad decisions, blah, blah. And if you take two regions of a sovereign country and declare them republics, which is another word, isn't it, for a country? I guess he's broken his own Minsk agreement, so that's over. And at least we know the color of the game. Okay. I was watching today, if you were, all these different heads of state come out and do their dances to these sanctions that are going on, waiting for President Biden. And the market was down 500 points in the Dow. Rallied back sharply. It was all over the board. I mean, remember what I told you. This is not a position trader's market. It's a day trader's market. It was everywhere. And then I watched as the president spoke. And of course, as he's speaking with the sanctions, I'm watching the market sink away. By the end, it started coming back. You didn't go beyond that 600-point or so break in the Dow. You came back. Gold market, instead of rallying and getting scared, breaking back right now. Energy markets pulling back a little bit. I don't want to think that life is getting somewhat used to this, but maybe it is. But there is a market that exploded. You know which one? Wheat. The market is fearful because Russia is a major world exporter of wheat, and so is the Ukraine. Wheat went up the 50-cent limit. That was impressive to me. But unless you're a trader, you wouldn't know that. Bonds and notes, okay? They didn't go anywhere. So the market didn't get that scared. Energy, of course. So energy, wheat, now let's talk about it. Did the dollar go up? Not that much. Did gold explode $30 or $40? Absolutely not. The market's taking things in stride. That's my point. Where the leakage is happening, and that's the way to look at it, the word leakage, is in the stock market. It's brutal what's going on now. The market's just a constant grind to the downside. So it gets you for a percentage point here, a half a point there, makes a little bit up, and then it takes it away again. And that's what's going on. And it's not just the Ukrainian situation. It is also fear that the Fed is about to, in 2 weeks or so, 3 weeks, meet. And at that meeting, they kick off a series of rate hikes. Now, how many? Nobody knows. You do realize today we saw one of our major banks come out and call for 9 consecutive rate hikes at every meeting. That means they're going to go into, 2023, and it's going to just keep going. They could be right if inflation doesn't get tamed. If inflation gets tamed, those rates shut off like that. So that is the question. And of course, watching energy prices hit $100, seeing wheat prices in one day go up 50 cents a bushel, a monster number, high meat prices, gasoline through the roof, rents not coming down, the Case-Shiller index at a 1987 high for the 20 homes, prices going up 18.7% or 6% month, the January versus January a year ago. These are powerful numbers. You can't argue them. When you look at the charts here, no more Fibonacci percentages. I forgot that. I'll remove that. You've got lower highs, lower lows. By the way, I want to come back here. What about those Fibonacci counts I gave you that you went to the 50 to 62% range when I did this chart and the market completely fell back on it? One for Mr. Fibonacci. In the swing lines, the trend is clearly to the downside. The market has rallied up and found resistance, solid resistance at the 200-day to the 18-day average. It originally found it at the 100 as you kept coming up here, as you can see on these breaks. Couldn't get anywhere, and then you try to find support in here. Then the market let go to the downside. But is this downside going anywhere? I'll give you a secret. I don't think so. And the reason I don't think so is you're back to the Bollinger Band. I think you found a zone where for the moment this market's going to get comfortable. Maybe there's an event overnight that I don't know about that'll happen. But barring that, if you get down to these bands like that, you typically find some support. That does not mean I'm bullish. I think this is where the pros are covering their shorts. You're at the Bollinger Band and you're oversold. NASDAQ, same picture. Trend down, Bollinger Band, oversold. I think professional money was taking money off the table today. Dow Jones, same thing, oversold. Notice how the market, even though it dropped a lot today, if you were looking at the late, remember the market closes at 3:15 in a settlement price, 3 o'clock in New York and so on, but then it reopens in Chicago. And as it reopened, the market gave you the bounce, but it still takes what the settlement was. And you're back to about where it was, trying to stay over the band. But I teach. This is not where you're going. At least I teach my clients. And by the way, as I said, I'm the human Swiss cheese guy. A lot of holes from being wrong. That is not a solid percentage idea. It's a lot different than a band that's this narrow. You're a lot wider at this point. Now we talk the Russell. The Russell has room to still drop. Yes, this was the friendliest of the markets until you got under these lows, and that was the ball game. So you've ended it, but you got to your Bollinger Band. Money should have been taken off. You were overbought. That's what I teach. Now you're coming down. You're not in a trend. I just expect a churn in this market for a while. Then we get to the VIX. So I'm going to step back here. If you go up to the VIX, what am I going to say? It's the flip-flop of what just happened in the stock market. Hit that Bollinger Band. If you're sitting next to me, got my elbow like that into your ribs, why aren't you taking some money off the table? And I know you're going to tell me, Ira, you are so out of your mind. Do you know what's going on in the world? You want me to give up my VIX position? I get it. 30-year bonds, sort of just drifting in here. I think that we'll see the March bonds and notes go off the board without a lot of fanfare. The next action is probably going to come out of the June contracts. You have a lower low, higher high. You've gone for 3 days now and just stalled. Where I said, line in the sand, that center line where markets like to figure out what to do next, the 18-day average of closes. 10-year note, very similar, same type of thing. Same in the dollar index. Wouldn't you think with all this going on, inflation, fear about an event where we've not seen 190,000 soldiers on a border since World War II, that the dollar would be taking off to the upside? What the heck? Interesting. Eurocurrency. I was telling my clients today, I'm looking at the market and I'm going, you're in a downtrend. I'm looking at the resistance. I had mentioned ideas on selling, and at the day's end, you know what I told them to do? Time to maybe not own this short position. I don't know. And the reason I don't know, why isn't the dollar going up? 40% of the euro makes up the dollar index. If I don't understand something, sometimes I like to walk away. The British pound, they did their best to beat up the pound today. They didn't do a very good job. The trend is still up. The market is working off, this is present tense, working off an overbought condition. Overbought conditions, to me, don't attract new money in them. The market's working itself here. Currencies don't know what to do. That's pretty much the story that I'm seeing. Bitcoin is still under a lot of pressure, might make, the word is might make, another run to the lower band. I don't know that it has to. It's already oversold. Guess what was on all the news wires that I'm reading today that discuss Bitcoin? Next technical support, $30,000. Wrong. Next technical support's $35,000 if it can get there. I think you're off base. Just the way the resistance was up here, the support is down there. Next, look at this difference and how this market came alive on this differential of Brent versus WTI. Why do you think that occurred? Is it wrong data? I don't think so. What is it? Brent is what oil? Part of the OPEC, part of Russia. That's the difference. By the way, that's one heck. Brent is under a lot of pressure. People are realizing that this index, when people talk about it, it's not a great index, Brent. It makes up not that big a percentage of the world oil, and yet we think it does. There's a move afoot to create maybe another index that'll be better, so keep your eye on that. As we take a look, when you get up, I'm going to repeat myself. Here's the market, and this was on Thursday, Friday's action. If you rally and you get up to the Bollinger Band, what would Ira be saying on this? That's where I think the pros are taking money off the table. That's what I'd be telling you. What would I say in this market if you're sitting here like that and you get up to that number? I'm going to say the same thing, and lo and behold. Want me to keep going? Here's heating oil. What would I say on testing it? You've got to take, if you think you're learning my Bollinger Band course here, I promise you, you're not. I'm leaving out a couple of key parts just because you're not willing to spend a few dollars to learn it. I'd rather if you think you got it, no, you didn't. That's real important right through there. Natural gas. Okay, this has turned bullish, and suddenly the April contract looks nothing like the March. I think you're looking at support now at 438.70. If you take out 430.60, then you do the damage to the chart. But until then, this market's in what? It's in an uptrend. If you like the charts I have, and you'll notice my Bollinger Bands are one way, they match yours, but not my slow stochastics. You have to be a paid subscriber of my research to understand the difference you have to make in your formula, and I won't give it to the general public. I give it to my subscribers. In my futures trading kit, I teach how to work with a lot of this. And then we work with the exchanges to get you free courses so you can learn things. I then put in my goodies. Pivot points. You ever work with them? It's a day trader's delight tool. It is probably, in my opinion, the best day trade tool I've ever seen. That's a pretty strong statement. The best one. Because it gives you support resistance zones, and you have to learn how to play with them, and then you add to it momentum indicators and like. I talk about it. I give you a mini course in here on it. Actually, I give you the course, so it's a freebie for you. Why don't you take a look at that? Then the Arun indicator. Time is very important as you look at an indicator, and it measures time and price movement. Very cool. Then you have to learn money supply. Why? The Fed, if they're on this tear, go back and do yourself a little bit of history. They're talking 9 interest rate hikes. Go back and read about Paul Volcker, what he had to do. I'm fortunate, I'm old, and I went through all this already. And I saw how that works. And I saw what he did. You have to learn about M1, M2, and M3. They're simple to understand. You take a look, and I created a chart for you to see how it worked back then. It won't work any different now. I really believe that. It's going to be the same thing. Money supply, what the Fed does with interest rates, how they expand, take it in, and how it moves through the economy. They're difficult, but they're also easy if you learn how to put them on a graph and you start getting an idea about it. So how do you get all this plus our charting software? Could I make it easier? Our futures trading kit, go to iraepstein.com, free offers, and away you go. I'm Ira. You have a good night. Talk to you later.